Hello, I'm Tony Kay. Welcome to Property Point. I'm joined by Nerida Conisbee from REA Group.
Thanks for having me.
Hi, Nerida. Nerida, let's just talk about what's happening with Chinese capital inflows. We know that there's been quite a bit going on in China itself to restrict capital outflows. What are you seeing?
Yeah, it's interesting. So mid-August, the Chinese government put property on a restricted investment list for Chinese companies investing offshore. So it's not banned. Gaming was banned. You're not allowed to, if you're a Chinese company, you can't invest overseas on gaming. But if you want to invest in property, it's going to be restricted and it's going to be under greater levels of scrutiny. So for Australia, I mean, we're very reliant on, or not reliant, we have had a lot of foreign capital here in Australia for a long time. Chinese capital has dominated. So around 13% of all commercial property transactions last year was from Chinese groups. It started to decline this year. We saw around 8%. But there's no doubt that for commercial property, it does mean there'll be fewer buyers. There'll be less development as well because Chinese buyers have been so active in the development space.
So what about on the residential level? At one stage in certain areas of Australia, there was very heavy Chinese buying support. There was offshore agents or locally based agents on behalf of offshore buyers, bidding quite aggressively at auctions, pushing up prices. Are we still seeing that?
For Chinese buyers, Australian residential is very attractive. I mean, it's a safe place to put your money. A lot of people are buying here to put their children through university. If we have a look on our site and look at where Chinese-based property seekers are looking, it is the two top locations are Carlton and Clayton. And, that's Monash Uni and it's Melbourne Uni. So, those two locations are the top locations. So I think that will continue. I think as long as Australian universities continue to attract a lot of overseas students, which they seem to be able to do, that will continue to mean more demand for residential. With fewer Chinese developers in Australia, I do think that may make a difference in the level of Chinese buyers. I think, a lot of these Chinese developers are very experienced at selling back to their own networks in China. Australian developers, though, have become better at it as well, though. So I think, a lot of the learnings that they saw the Chinese developers doing, they're using as well to attract offshore interest.
So obviously that would be artificially inflating prices in those areas like Carlton and Clayton?
Yeah, not really. I mean, what's interesting is a lot of the what they're looking at are new developments of Chinese or offshore buyers are restricted to only buying new in Australia. And a lot of these apartment projects wouldn't have got up and running without these Chinese buyers. So, if you're a developer, you might need 60, 70% pre-commitment before you can go ahead and build a project. And if we didn't have those offshore buyers helping with those higher levels of pre-commitment, a lot of that development wouldn't have taken place. And, I don't think anyone really knows how many Chinese buyers have been in the market over the past decade buying residential. We know from the Foreign Investment Review Board how many have been reported. They have to report to that group, but there is Chinese money flowing in and funding local buyers as well, which we can't track.
Yeah, there's ways around it.
There's ways around it. So, but without a doubt, a lot of that Melbourne apartment development in particular would not have occurred without Chinese buyers.
Yeah, and what about in Sydney and Gold Coast and those areas as well? Has there been a lot of Chinese activity up there?
Yeah, there has. I mean, not to the same level that we've seen in Melbourne. We see twice as many Chinese buyers look to Melbourne than we see in, say, Sydney. But obviously they're interested. And really, if we look all around Australia, a lot of that development that has taken place over the last 5 years has been as a result of Chinese buyers.
So what would happen if there was like a total cut-off emanating out of China itself in terms of what investors can do there? How would that affect us here?
I think there'll be a number of effects. I think from the residential side, we'd see less development, so that will impact affordability. I think, Chinese buyers are blamed for higher prices, but the reality is they have contributed to an enormous level of supply, and that level of supply would probably be reduced. So I think that would be the first thing. We won't see as much development taking place. For commercial property, Chinese buyers are very active in the commercial space. I think it'll take a lot of pressure off competition for assets and probably will lead to less price growth for commercial assets. It possibly will prolong the cycle, though. I think at the moment, although it's recognised that the residential cycle is running out of steam, commercial property still has a fair time to run. And I think fewer Chinese buyers will probably mean that cycle will keep going quite a bit longer.
Okay, well, thanks very much again, Nerida.
Thanks for having me.
Thanks for joining us. Join us again next time for The Property Point.
International Equities. A study by the Australian Stock Exchange shows 75% of Australian investors only hold ASX-listed stocks. The Australian market makes up a small portion of the global economy, and without international exposure, you miss out on dynamic economies like the US and Asia, which can diversify your portfolio and boost returns. Investing in the InvestSmart International Equities portfolio gives you instant diversification across the globe through a hand-picked selection of exchange-traded funds. Diversify your portfolio and gain exposure to the globe's most successful companies. For more information, visit investsmart.com.au.